Finance Minister Nirmala Sitharaman has now come on record to endorse RBI's tough measures on unsecured personal loans, saying that RBI is conscious of whether that thin line is between lending and enthusiastically lending versus growing NPAs or resulting in growth of NPAs as personal loans and people who are asking for more personal loans continue to spur.
So, Nirmala Sitharaman's message to NBFCs as well as small finance banks is very clear, and she's saying, and I quote, don't go too far too soon. And that is exactly what she's saying, and she's echoing pretty much what RBI Governor Shaktikanta Das had said and had actually gone ahead and implemented by assigning higher rates to unsecured loans. What are these unsecured loans? These unsecured loans are both personal loans as well as, let's say, enhancements in credit limits on credit cards, etc., which are not backed by any sort of mortgage. Now, what happens in the case of a home loan is that the bank has got, let's say, that entire real estate piece as mortgage. In the case of a car loan, the bank has got that piece of asset which it can then take back from you and recover what it has lent to a consumer. In the case of personal loans, in the case of credit cards, there is no mortgage. Now, this is a segment that has actually been ballooning for the last 1.5 years or so. And over the last 18 months, RBI has been fairly consistent in its warning, in its sort of direction to banks, NBFCs, small finance banks, fintechs, that go slow, take it easy, because you don't have any collateral against what you are lending out. Now, in the absence of that, the possibility of bad debts mounting back on your books becomes a high probability. Now, what RBI has done by increasing the risk weights is that it's asking banks to keep aside an additional 25% of the already 9% that it would assign to any unsecured loan. So this takes the possibility of banks having to keep, instead of 9%, up to about 11.5, 11.6% as capital allocation towards these unsecured loans. Now, Nirmala Sitharaman came on record yesterday and said very clearly that, as banks, as NBFCs, as lending institutions, be cautious, be wary of what you are lending, how much you are lending, who you are lending to, and perhaps unsecured loans is not the best arena for these financial corporations and institutions to really, park their money in. In lieu of that, what she's suggesting, and this is again a quote that has come from Nirmala Sitharaman again yesterday, she's saying that as banks or as lending corporations get deposits, take money in, and when you get these deposits, give these deposits a good interest rate. Now, when you give these deposits a good interest rate, in the process, you end up making money as well. And how do you do that? She's saying lend to those who want to use the capital from you to create jobs, to put up units, to put up factories, and participate in a larger nation building sort of a role. So give money perhaps to those organizations, those individuals who have entrepreneurial MSMEs, entrepreneurs, and those who are going to exactly. So those institutions, those individuals, those companies which are likely to use that money better and drive that sort of growth within the GDP by way of capital investment, by way of employing more people, etc. Now, there's a little bit of a dichotomy here as I see it, because the bad loans at banks, the NPAs at banks have thus far, and they've reduced significantly over the last few years, ever since we started tightening regulations and reforming the financial institutions. I think the challenge really was that you were lending large sums of money to corporations and to businesses, and those were the businesses that were actually tanking those loans, and as a result of which the NPAs in banks were ballooning. So banks and NBFCs had found the sweet spot in unsecured personal loans, and consumption by its nature in the last few years has been one of the biggest drivers of India's growth. Now, at some level,
look at credit card spends.
Look at credit card spends, look at large purchases being converted into EMIs and people going ahead and acquiring more and more assets to bring back into their homes. The consumption story is worth about 55% of India's GDP. And I think that could perhaps potentially now take some sort of a beating with RBI tightening norms, Finance Ministry also telling NBFCs, small financial banks, to be cautious in their exuberance of lending to this largely ballooning sort of sector, and thereby perhaps loans could become more expensive, and if loans become more expensive, this consumption story may take a bit of a beating.
All right, and there is no consensus on the consumption story. Different analysts, different experts are saying different things. They're saying maybe consumption will continue at the same pace. Others are hoping and predicting that people will buy less now, purchase less, now that they'll have to pay higher interest. Some are also of the view that because lending will become more difficult, there'll be more thorough, rigorous checks, not everybody will get that loan that they apply for.
So, I think at one level, NBFCs and the small finance companies, fintechs, etc., will be required to be more wary of who they are lending to.
So your
it may
Paytm,
more
Bajaj
KYCs.
Finance, all of these
Exactly.
NBFCs,
Geo Financial Services as well, which is entering the
services.
fray now. So I think they will now need to be a little more KYC compliant, stricter, knowing your customer very well, who are you lending out to, and of course the interest rates, the higher capital allocation could have an impact on the interest rate on which you lend to customers. If that goes up, then those who are borderline cases sitting on the fence looking at taking entry-level loans may get dropped out. But then at the same time, you also have India's middle class, which is also growing year on year and is likely to be 60% of the country's total population. From 30% right now, is likely to be 60% by 2047. So, so it's in any case a large middle class. The consumption story, speak to any economist, I think everybody is bullish on India's consumption story. But this consumption story could take a little bit of beating, if the easy access to capital, easy access to loans to purchase capital goods, assets is reduced.
All right. So far, no change in interest rates, not that we know of.
No changes yet. No changes
yet, not that we know of. Will happen perhaps gradually, but there is a consensus that says that the consumption story that India is riding on, the growth in consumption, could take a beating in days and months to come.